Understanding asset tokenization. Recently, I was given the chance to collaborate with a financial institution in order to build its asset management company. During the course of our conversations, one subject stood out: the tokenization of assets. A large amount of interest was generated by this idea as the bank investigated novel approaches to improve the quality of its services. Not only did this experience serve to reaffirm the significance of asset tokenization, but it also motivated me to disseminate my understanding of this groundbreaking idea to a more extensive audience. There is a significant number of professionals and enterprises that are either uninformed of its consequences or uncertain about the ways in which it could modify sectors. The purpose of this essay is to provide a full review of asset tokenization, including its advantages and the reasons why assets tokenization is an important step forward for both enterprises and banks. In the context of blockchain technology, the term asset tokenization refers to the process of transforming physical assets, such as real estate, equities, currencies, artwork, or commodities, into digital tokens that are recorded electronically. Within a digital ecosystem, each token represents a fractional or complete ownership share in the asset, which enables the asset to be exchanged, sold, or kept securely through the use of a digital economy. This procedure is made possible by blockchain technology, which offers the following benefits. Having an unchangeable record of ownership and transactions is what we mean by transparency. Security. Identification numbers that are one of a kind for each token, protecting sensitive information. Transactions that are completed more quickly and at a lower cost by removing the need for middlemen are examples of efficiency. There is a growing interest in the concept of asset tokenization across all sectors of the economy. Unfortunately, there is currently a large knowledge gap regarding the possible applications and benefits of this technology. Numerous organizations and individuals continue to be uncertain about the ways in which tokenization has the potential to revolutionize conventional procedures, enhance efficiency, and introduce novel prospects for expansion. I recently worked with a bank, and it was through that experience that I became aware of the significance of fixing these gaps. By removing the mystery around asset tokenization, I intend to bring attention to the usefulness of this technology and encourage its widespread adoption in both the public and commercial sectors. Asset tokenization has far-reaching ramifications, not only for financial institutions, but also for individuals, enterprises, and governments. These implications are not limited to financial organizations. This is how it can be of use to the entire world. By permitting fractional ownership, tokenization makes it possible for more people to have access to high-value assets. This opens up opportunities that were previously out of reach for people with low financial resources, such as investing in real estate, equities, or art. For instance, a small investor can now own a portion of a masterpiece or a luxury home, which enables the development of wealth and involvement in the economy on a worldwide scale. It is difficult to sell or trade many traditional assets, such as real estate and fine art, because they are illiquid. Tokenization is a solution to this problem because it generates digital tokens that may be sold on secondary marketplaces around the clock. Consequently, this increases liquidity, making it simpler and more expedient for asset owners to release value. The use of blockchain technology helps to reduce the likelihood of fraudulent activity by ensuring that all transactions are recorded on an immutable ledger. While the safe nature of blockchain technology assures the legitimacy of tokenized assets, transparency helps to increase confidence among investors, regulators, and enterprises. As a result of the elimination of middlemen such as brokers and clearinghouses, tokenized transactions are able to both lower costs and accelerate settlement times. Especially useful in fields such as real estate, where conventional procedures can take several weeks or even months to complete. This is a significant accomplishment. Tokenization is becoming increasingly popular among businesses across all sectors as a means of gaining access to new prospects. To explain why. Through the use of tokenization, enterprises are able to generate revenue from assets in novel ways. Through the sale of fractional shares of high-value assets, businesses have the ability to broaden their investor base and diversify their sources of revenue. It is possible to automate procedures such as record keeping, compliance, and settlement through the use of tokenized transactions. This allows businesses to concentrate on their core operations while also lowering their administrative overhead costs. When businesses provide customers with current and flexible investing options, they gain a competitive advantage. This is accomplished through the provision of tokenized assets. In addition to this, it enables a greater degree of customization, as smart contracts have the ability to impose particular terms and conditions. Businesses now have the ability to access global markets without being restricted by geographical or regulatory boundaries thanks to blockchain technology. Through tokenization, the investor base can be expanded, which in turn drives growth and scalability. Tokenization is not merely an option for financial institutions, rather, it is mandatory. The landscape of finance is undergoing fast change, and traditional banking institutions are under increasing competition from entrepreneurs in the field of finance's technology. The following are the reasons why financial institutions should implement tokenization. Tokenization is already being utilized by blockchain platforms and fintech firms in order to challenge the traditional banking industry today. Failure to adapt puts financial institutions at danger of losing market share and relevance. To maintain their competitive edge in this rapidly shifting environment, banks might benefit from adopting tokenization. Financial institutions are able to provide cutting-edge services such as fractional ownership, speedier settlements, and decreased transaction costs, thanks to the implementation of tokenization. These improvements not only bring in new customers, but also aid in the retention of existing ones. The transparency of blockchain technology makes regulatory compliance and risk management much easier to manage. Through the utilization of tokenization, financial institutions can enhance their auditing procedures and more effectively meet regulatory norms. Banks have the ability to investigate new revenue streams, such as tokenized deposits and lending systems based on blockchain technology. Another advantage of tokenization is that it makes it possible to enter emerging markets such as central bank digital currencies, CBDCs. Tokenization is exactly in line with the expectations of digital native consumers who are demanding financial services that are both more rapidly accessible and more transparent. By implementing this technology, financial institutions will be able to serve the customers of the next generation. Tokenization makes it possible for individuals to own fractions of properties, which in turn makes real estate investments more accessible. In the historically illiquid real estate market, it also boosts liquidity, which is a significant benefit. Tokenized stocks do away with the requirement for brokers and clearinghouses, which results in a reduction in transaction costs and enables settlements to take place more quickly. Through the process of tokenization, access to high-value commodities such as artwork and rare collectibles is made more accessible to a wider audience, which in turn facilitates market expansion. Banks are able to employ tokenized assets as collateral, which enables them to conduct loan operations that are both quicker and more efficient. When it comes to the management, trading, and investment of assets, asset tokenization represents a paradigm shift that goes beyond merely being a technological achievement. Through the utilization of blockchain technology and the digitization of ownership, it guarantees transactions that are much quicker, more secure, and more cost-effective. The use of tokenization by enterprises enables them to access new revenue streams, enhances their efficiency, and broadens their worldwide reach. For financial institutions, this presents a chance to innovate, maintain their competitive edge, and meet the ever-evolving requirements of digital native customers. My most recent experience with a financial institution brought to light the enormous potential of asset tokenization, as well as the imperative nature of its implementation. The maturation of this technology will result in the redefining of industries, the creation of new opportunities, and the paving of the way for a potential financial future that is more inclusive and transparent. It is time for individuals, corporations, and financial institutions to acknowledge this transformation and make use of the transformative power it possesses.